In late August, with Solana near $205, we wrote that the top 10 crypto was in the process of concluding a setup the bulls were not going to like. Solana had more than doubled over the previous 4 months, so trader sentiment was understandably bullish. Elliott wave analysis, however, revealed that the structure of that recovery was corrective, which in turn meant that another notable sell-off was likely to follow. We thought that downside targets near $80 make sense for Solana in the months ahead for a decline of roughly 60%. Here is the chart this prediction was based on. The recovery from $95 looked like a simple ABC zigzag correction with a 5-wave impulse in wave A and an ending diagonal in wave C. According to the theory, once a correction is over, the preceding trend continues. Since the bottom at $95 was the conclusion of a $200 crash from $295, it made sense to prepare for another notable one. Almost 7 months later now, this updated chart shows how the situation developed. The first thing to notice was that the bearish reversal took longer than expected. The correction evolved into a WXY double zigzag instead, allowing Solana to exceed $250. That was of little consolation for the bulls, however. All it did was postpone the plunge, not cancel it. When it finally came, Wave C dragged Solana to under $70, erasing the entire Wave B and then some. The bulls definitely didn't like it. Now, Wave C looks like a complete impulse pattern, marked 1, 2, 3, 4, 5 in brackets, where 2 lower degrees of the trend are visible within Wave 3. If this count is correct, the entire ABC retracement from $295 to $67.50 is now over, and it is time for Solana to head north again. For the bears, extrapolating the recent past into the future could be a costly mistake. While paying $95 for a purely speculative asset with no yield and no intrinsic value is a big ask for us, the Elliott wave odds seem to favor the bulls again. This is the count to rely on as long as $67.50 holds.